Hello, this is weekly market analysis for the equity markets on the week of December 5th. My name is Brendan Wendell, Chartered Market Technician, and I'll be guiding you through some of my observations and analysis on the markets. So, starting off, we'll take a look at a comparison of the four U.S. equity futures, and you can see that the Russell, since the peak back in November 22nd, has been leading us to the downside quite rapidly. We'll see if that it's going to be continuing the case, or if we're going to see the Russell let up a little bit. Uh, Following the Russell has been the Nasdaq in orange right there. You can see that's the second strongest move to the downside, down over 4%, followed by the S&P, and the laggard has been the Dow. Even though it's been overall weak as prices moved up, it also proved to be a little bit weak as we tried to move to the downside and didn't really drop nearly as quick as the other markets did. So jumping into the Russell, on the daily chart, you can see we have definitely made lower lows and are appearing to be in a bit of a downtrend. Not official, though, on the daily because we don't have a lower high followed by the lower lows, but we did break the prior highs, so we definitely see lots of bearishness in this market. And with the momentum, it looks like it's going to continue. We don't really see any kind of relief in sight, even though we started to stumble and go a little sideways over the last several days. Actually, even last week, the last five candles are somewhat sideways in nature here. We really didn't, we did move down, and it looks like we're going to be able to take out these prior lows from July and August, respectively, as we move into this new week. And there's really no demand to hold us up until we get down to 2000. So if that's the case, we continue to slide, look out below. Going to the 4 hour chart, the only thing we might have if we do get a bounce, you can see we bounce at the 127.2% retracement value. We even bounced at the 61.8 just slightly and a small pause at 100%. So if we continue down, we may pause once again right around 2086 before we get down to that demand zone just under 2000. But the momentum is pretty strong to the downside, as evidenced here by the RSI going way under 40. So if we do get a bounce, it's not likely to be much, to be honest with you. I doubt we'll even get up to the 23, 28 area of supply before we hit this 2086 area of, well, just the extension, really. Diving down a little more into the 1 hour time frame, we actually do have a little bit more supply that shows up here. Really good drop coming from that 2241.2, 2254.9. And as you can see, we're moving down. We're making lower lows, and those lower lows are below 40. So that's showing lots of bearishness. However, we're also making highs above 60. So, it's really overall just kind of a weak downtrend that we're seeing. We did bounce at these Fibonacci levels. And because we've been bouncing at each of the Fibonacci levels, it looks as though we're likely to bounce here again at 2086. So in the smaller time frames, I would actually look for an opportunity to short, maybe even possibly sell this 2142. If we cross below that Fibonacci extension, you can place your stop 1 ATR on the 4 hour chart, whatever that ATR happens to be. Just place your stop 1 ATR above your entry at that break of 2142, with the target being 2086. So that could give you a nice little move to the downside. Either way, if this does move down, it's going to drag the rest of the markets down with it, as it has been. Looking at the Russell on the 15-minute chart, if we do get any kind of a rally, again, it's not going to be much because we do have another area of supply here at 2209, 2222 with another one right above it. So honestly, we may just break down. We seem to be in some kind of a corrective mode right now. And you can see we made some lower lows, but higher lows on the indicator. That's a positive divergence. Usually leads to a little bit of a rally, but like I said, we're not going to get much out of this for that rally. It's likely to continue to move down, and we could just break down from where we are. This is what we call a running correction, where you've had your impulse down, but instead of correcting up like we normally do, we just kind of get consolidation moving just slightly in the same direction as the trend. So that's our running correction, which is usually followed by another impulse, in this case to the downside. So keep an eye out for that. Moving over to the big picture on the monthly chart of the S&P, I decided to look at this as kind of our overview of the broad markets, especially large cap. And you can see we had a bit of divergence where the momentum was dying off as prices were going higher. The 13-month moving average, the exponential moving average, works really well as a dynamic trend line. You can see that it's very rare for us to close below that, but when we do, we get a pretty good dumping of price. And I'm not saying that because I think this is going to happen. I'm saying that that's just a kind of a line in the sand, and often we'll bounce off that area. You see here, when we moved away from that moving average, we came back to the average before bouncing again. Moved back to the average, we bounce, and now we're kind of moving back towards the average. So if we continue to slide down in price on the S&P, I would actually expect that 13-month moving average to possibly give us a bounce whenever we meet it. Remember, it's going to be rising as we're coming down in price, so it may meet up somewhere right about maybe 44.50 or so. We'll keep an eye out on that, but it's not going to hit this week. Trust me. It shouldn't, at least. I mean, I couldn't say if there's not. It's a possibility, but I doubt it's going to happen. Anyway, looking at the weekly chart, we did have a divergence here. So with the negative divergence, that's our first warning sign about trend weakening. And it's not a reversal yet. It's just a warning sign. That's all. To get a reversal after you get a divergence, you need to have either one of two things happen. One, prices make a lower high. Basically, they push back up and make a lower high. And that lower high does not get the RSI above 60. That would confirm we're entering a bearish trend. Or if the prices continue to slide and the RSI simply goes below 40, that would also confirm the bearish trend. So if we make another high, say prices start to peak back up, and that high is above 60, then this was simply a correction, not a reversal of trend. So I don't think that the bullish trend is over yet on the longer term weekly charts, but we are definitely getting a bit of a pullback. So in your long-term investments, you don't really need to panic. As a matter of fact, you might be looking for opportunities to add on to those at cheaper prices. But when it comes to trading shorter term, you definitely want to keep an eye out because it looks like things are going to get much more bearish here in the short term. So let's drop down to the daily chart. And looking at the daily chart, as you can see, we had that negative divergence. And after the negative divergence, we tried to push back up and drop below 40 on the RSI. So on the daily time frame, we have broken the trend. The weekly and monthly were still bullish, but the daily is definitely negative now and gone bearish. We've even made a slightly lower high here, although I wouldn't be surprised to see a small rally for another lower high being made. But ultimately, I think we're going to keep pushing down towards this 43.64, 43.17 area of demand that we have down below. So you can see that we haven't really had too many moves below 40 on the RSI, but when we do, it leads to lots of selling pressure here. You can see the big dip back in 2020, November. That was the COVID drop. And then, of course, we ended up moving down here quite a few times in August, September. Actually, it was September of this year. And that took us below 40, but we ended up with a positive divergence that signaled the reversal back up. So we'll keep an eye on all that. But as of right now, you got to be a little bit more bearish bias when it comes to the S&P. And I do believe we'll get down below 4,400. Although, again, you got to watch that monthly moving average that may meet up right around that 43.70 to 44.50 area. And we could overshoot it, but not close below that monthly moving average and still hold the trend. So I'll be keeping all that in mind as I'm watching price and identifying longer term where things are going to go. But as of right now, I'm going to be looking for shorting opportunities on the smaller time frames. So going down to the 4-hour time frame, we see we have a positive divergence. Overall, momentum has been dying off and increasing on the downside. But it looks as though we may start off Sunday night going into Monday with a little bit of a move upwards after all the selling pressure we've been experiencing last week. And the reason is we see that the momentum, we moved down in price, but momentum wasn't there. So that's a positive divergence, and we should get a little bit of a bounce. We started on Friday and may continue into the next beginning of the week. Ultimately, though, I still think we're going to be headed down. So this little pullback may just give us a retracement before we continue to go lower. I would say 45.60 is probably the area that you'll see the selling pressure kick back in. It's kind of the beginning of that larger candle here at the end. Dropping down into the 60-minute time frame, again, we were looking at, it was 45.60. So you go here and you can see, 45.60 has an overlap of two candles. Often when you get this overlap, especially when you have it as a prior area of support, it can become a pretty strong resistance level going forward. So even though I don't have it marked on this chart, I'll watch the 45.60 as it could be an area of inflection for price, could cause us to go back to the downside. If not, if we do try to break out, again, we had the positive divergence where prices went lower, the indicator didn't. So we did a little bounce just shy of demand at 44.89. I don't know if that'll be able to hold next time it comes down because we came very close to it the first time. The 44.35 is a much stronger area of demand that I'll watch for. And if you're looking for a shorting opportunity, like I said, either this 45.60 or the 46.2650 is the area you're looking for. Going down to the 15-minute chart, you can see the 4560 actually not the best of zones, but it was acting as a little bit of supply. You have drop base drop with follow through, and we already pinged off of that. We couldn't get above 60 here. So I don't know. I was saying that there might be a little bit of a bounce and may go a little bit deeper into the zone. But if we don't go above 60 as we come rallying back up into that zone, then expect that 4560 to really hold and push us down to those lower areas of demand that I was watching for. So that's kind of what I'm seeing on the ES. We can move over now to the Nasdaq and the daily chart, the big picture. You see the weakness that's come in. We actually have not gone below 40 yet, though. So overall, we're still bullish on this time frame, other than we did snap the uptrend with making a lower low. So the uptrend's over. The downtrend has not quite officially begun, and we'll keep an eye out for that. The next area of demand that we're looking at, we have rally, base, rally right here at 15,273 to 15,463. On to the 4-hour chart, we have rally-based drop and a little bit of a drop-based drop areas of supply overhead. So if we do start off with a little bit of bullishness, which this one looks kind of weak, honestly, we have more momentum to the downside. So this is looking more and more like we would just collapse, not really seeing any kind of that bouncing opportunity like we saw on the ES. So I'm much more bearish here on the Nasdaq than I was on the ES. And that makes sense when you go back to that comparison chart with all the percentages. This was the second strongest market to the downside anyway. So if we do try to bounce just a bit, that 15,915 is really going to be a problem. It's a pretty thick zone. Good selling pressure. It broke a couple of prior lows going all the way back here to October. So I expect this area to hold for us if we do try to rally and push us down at least to 390, if not all the way down to 14,645. On the 60-minute chart, you can see that we've had a little retracement already, and we've retraced 38.2%. We didn't quite hit our extensions on the way down. This is where the extension lines, I think I drew those last week. I'm not positive, but I think they were in there. So looking for those targets, you see we did hit the 61.8% area, got close to the 100%, but didn't quite tag it. Anyway, we are retracing. If we retrace it a little bit higher, we do have the 61.8%, which lines up with the overlap of those two candles. That's a high probability turning point at 15,853. So I'm going to look at it 15,853 as a possible selling opportunity with my stop loss either at the next level, which would be 938, or you can, again, use the average true range for the 60-minute time frame and simply place your stop one ATR above that 15,583 entry point and target the next Fibonacci extension of 15,519 or this area of demand, because you see there's a fib level inside of that as well. So get out maybe at 15,425, somewhere above that area of demand. Down on the 15-minute chart, you can see we were already tagging this area of supply once, and we are very weak. We can't get above 60, so we may be done with the upward move. This was the stronger move to the downside. And if we do go up, again, we might stall out probably right around this 15,793 to 15,853. So that's what I'm looking at on the Nasdaq for the equity front. And then finally, we have the Dow. The Dow is extremely weak. You can see we came down and actually punctured the demand zone. We did bounce there, but the RSI was way below 40, which means this bounce will not make a new high. As a matter of fact, it probably won't even break this 35,100 area. We're going to stall out before we get there and have to go to lower time frame to see exactly where. And ultimately, I think we're going to continue to push down to reach 32,501. And I don't think we're going any further than that near term, maybe sometime in February of next year. But looking at the daily chart, definitely looking pretty weak and pretty bearish here. Looks like I skipped a sign here. Let me see here. No, I'm sorry. That's the daily. That's right. I went from daily to 4-hour. I was right. Anyway, looking at the 4-hour chart, if we are retracing anymore, we've already retraced 38.2% from the lows that we were creating there. If we do retrace anymore, which this doesn't really look like it wants to, honestly, we have lower lows in price, lower lows on the indicator. I think we're just going to keep heading down. There may be a little influence if we get pulled up by the Russell and the Nasdaq, or I'm sorry, the Russell and the S&P. We're showing there might be a little bit of pull to the upside. Then, yeah, we might be able to retest up to the 50%, 34,914. But ultimately, this looks really weak. I wouldn't be surprised to see it continue to collapse down. Even on this 4 hour, we got lots of momentum to the downside. The only saving grace is right here. We didn't make a low with this green candle below 40. So if we make another candle that's got a higher low and breaks the high of this green candle, then and only then I'd expect us to break out, maybe stalling out at 35,147 though. So I don't expect a whole lot out of that to the upside. You can see if we do try to rally, we're running into some fresh supply anyway. So we got one right here, just around that 50% retracement, another one just above the 61.8. So again, pretty bearish going on so far on the Dow, and I think that we'll either go sideways or downwards rather than going up on the Dow starting off this week and continuing through the week. Even on the 15-minute chart, you've got a level on level that you got to contend with, 34,804 up to 34,986. Pretty thick zone there, and I just don't see us being able to get through that very easily. And the momentum doesn't look very strong. It's more weak. So that's what I'm seeing on the equity front this week. If you got any questions, let me know. Make sure you hit that subscribe button so you can be notified when I post new videos, and check out the other videos I have available on the channel as well as the education. And I want to thank you for being a supporter of me. Take care, trade safe, and trade well.